operational companies. Jitendra Sriram is with us, Senior Fund Manager at Baroda BNP Paribas Mutual Fund. Jitendra, good to have you with us here. Thank you for your time. The market is not holding, Jitendra. Banks are doing better today, about 1.25% gain on the Nifty Bank. But broader market and the Nifty, just under 25,000 right now on the Nifty. Your thoughts? I mean, do you think we're in for some range-bound trading here? The US market blasted off to new highs last night. So no stopping that. We're looking at what, 6,000 on the S&P soon. What would that mean here?
Sure. So I think India has had a phenomenal run over the last 12 odd months. So to that extent, you might see a little bit of sideways consolidation coming through for markets. Broadly, I think there are enough triggers as well for the Indian markets, but one would obviously need to correlate it with the valuations, which have gone up a little bit in the past 1 year. So my take is that, you first of all have this issue that India's growth seems to be on a steady footing. Yesterday also, the RBI reiterated that number in its MPC meet. Plus, you have the issue that at some point of time by the year end, the RBI will go through with a rate easing cycle, which should augur well for our capital markets as such, bringing down the cost of capital. So there are enough triggers, but I think near term, you will obviously have this little bit of a hiccup that you may have some bit of disappointment on the earnings front in 2Q because, governmental capex was a little lower because of the election dynamics. Plus, you had little softer commodity prices, a slower China offtake in the second quarter prior to the stimulus and all that. So that could have a little bit of be a little bit of an overhang for markets in the near term.
How much of a concern will these subdued earnings be? We were chatting with Gautam Dugad, and he said for this year, we're likely to see a 7% earnings growth, and it's the first time in 5 years we will have a single-digit revenue growth, a single-digit earnings growth. And they've lowered the estimates even for next year, FY26. So how much of a concern would these earnings be? Is it price staying? Can it cause a deeper correction? What's the extent of weakness?
Sure. I think it's a good point because I don't think the consensus is still modeling in something like a single-digit growth. But having said that, I don't think that should be the base case because clearly, yes, there was a little bit of a slowdown in the governmental capex, but it is not that those budgets have vanished. Some part of it will come back, whether they hit that total targeted number this year by March or there is a little bit of a spillover, time will tell. But I would say there should be an acceleration in spending coming through in the subsequent quarters. So our take would be that we should be seeing some kind of a mid-teen growth in the large cap indices as such. So we should be on course for that. What could happen is some of the mid and small cap indices, there could be a little bit of a slowdown where markets are expecting fairly lofty earnings and you might see some earnings cuts come through. So to that extent, I would say that, I wouldn't be so worried on the large cap space at this point of time, but maybe mid and small caps will see some earnings tone down.
Okay, all right. Hi, Jitendra. Good afternoon and good to see you in. Today, we kickstart the earnings season, right, with TCS. And getting into these numbers, I've been hearing so much of positive commentary. On days that the markets were low, in fact, the IT index was holding up steady. Today, there is some kind of nervousness getting into the numbers. But the broader consensus is second half of the year, we'll see a higher amount of spends. You'll see spends pick up. And FY26 onwards, we'll see growth. Are you in that camp?
Yeah, I think overall, the big point was there was a ebbing of discretionary spending in one of the major markets, which was US, when rate hikes were coming in one after the other at a brisk clip. Now, US has clearly made its stance known. So you should see a perk up in discretionary spending. And I would also go back to one other important read across, which is the Accenture results, which came out in end September. And where they did see a 1 to 3% organic growth. I'm ignoring the inorganic part. I'm just saying the organic engine itself fired about 1 to 3%. And they are also talking of a latter year recovery as such. So I think one should take comfort with the fact that, something which is much larger and is able to see that kind of growth catalyst coming forth. I think Indian tech should also be probably basing out with this quarter and looking for some acceleration here.
No, absolutely. And that's something that we will watch out for. By the way, just a few other names, right? Because broader markets, we've not really looked at in any great detail. We looked at them in early in the morning. The shipbuilders are still higher. Mazgaon and Garden Reach, etc., are up. Mazgaon, for example, is up 8% today. From 6,000 rupees, stocks at about 4,400. Garden Reach, similarly, the high was about 2,800, stocks at about 1,700, 1,750 or so. So there's still a far cry. Nothing on Cochin today. Cochin Shipyard is the other one, which has, I think, fallen off quite a bit. Stocks at about just under 1,700. The high was about 3,000 rupees. Any thoughts, Jitendra, on these names? I mean, the fallen defense companies?
Sure. I would say that, obviously we spoke about this little bit of a slowdown in the spending program of the government in the first half because of election dynamics. But what we have seen, even yesterday, there was an announcement of, I think about 120 or 1,000 crores. Cabinet Committee on Security actually released certain orders, which included 2 ship orders as well. So I would say that there will be some catch-up coming through. But I think the bigger issue which is plaguing the defense space as such, beyond a point, market will give lesser and lesser benefit to backlog because already a lot of these names have adequate backlogs, which will sustain them for 4 or 5 years and so on. Beyond a point, it doesn't really help that, you keep on boosting that backlog. What will become far more relevant and important will be the execution dynamics, and we need to see far more action there. For example, in aviation, you have issues of engine supplies and stuff like that, which obviously is plaguing some amount of delivery schedules. So we need to get some more comfort. So I would say one should be positioned more in names which have slightly better execution tailwinds now, rather than only focusing on the backlog here.
Okay. By the way, Incred Equities has come out with a note on the Hyundai IPO, which opens next week on the 14th. And they're saying it's priced to perfection. The valuation has to be kept in context with the weakening car industry demand trend. They're saying that the superior EBIT margin of Hyundai will be difficult to sustain as the management embarks to expand its market share gap versus its peers, immediate peers like Tata Motors. So they would prefer Maruti and Mahindra as a preferred play in their India passenger vehicle market. Because the valuation, there is no valuation comfort when it comes to Hyundai. It's priced similar to that of its peers. Jitendra, the anchor book would be opening. Is Hyundai an interesting, attractive opportunity for you?
See, the passenger car segment in itself is something which will be a multi-year growth story for India. In a sense, you clearly have a situation where disposable incomes are rising. Plus the fact that, some of these players who are straddling a better mix of UV versus sedans, which is the in vogue theme, plus the fact that, you have capabilities also coming through on where the business is itself transitioning, which includes hybrids, electric vehicles and stuff. I would say that, from a longer term perspective, that model actually makes a lot more sense to us rather than, something which is more in the traditional space, I would say. So to that extent, I think it is definitely of interest as such.
Okay, well, Jitendra, we'll leave it there for now, but it's a good chat. Thank you very much for joining us this afternoon, and hope to speak with you again. We'll take a break. We're back.